Retail sales weaker than expected. And if we take out cars and gas, it was even worse. Some now saying this could point to a second quarter GDP print that comes in below 1%. Ouch. Courtney Reagan has the retail headlines, Jane Wells keeping track of spiking gas prices, and Steve Leisman ties it all together with a nice little bow for us. Courtney Reagan, though, start off with you in the retail sales data.
Okay, Brian, so 2/3 of our country's GDP is consumer spending. And while many had forecast for a stronger second half, now that the payroll tax increases has lost its sting and the economy continues to show signs of improvement, the Commerce Department's latest data, not so inspiring. Overall, retail sales increased by just 0.4% in June over May, but stripping out autos and gasoline, retail sales look even worse, down 0.1%. There were areas of strength, though, particularly with the larger purchases. Take a look at this. Sales of motor vehicles and auto parts improved 1.8% in June. Consumers spent 2.4% more on home furnishings than in that same category in May, and 2.1% more online. But sales at building material and supply retailers fell 2.2%. Department store sales were 1% lower in May, and sales at food and drink retailers down 1.2%. That miscellaneous store retailer category buttoning it all up, posting a dismal negative 2.5% for June sales. Now, the labor market continues to be a drag on the lower and middle income Americans. A number of retailers, including most recently Family Dollar, expressing concern consumers are getting by with just the basics. That discretionary spending really is still strained for many, many Americans.
Okay, Courtney Reagan, thank you so much for that. Well, the gas prices are expected to jump 10 to 20 cents over the next few days. Jane Wells is live in California, where, as per usual, Jane, the drivers are really going to bear the brunt, right?
Yep. Mandy, we're already paying about 20 cents a gallon higher than we were a year ago, and then we're going to have this quick run-up. Analysts say it's going to get worse before it gets better, and they are watching a report, waiting for it on Wednesday from the government to see if there's another surprise, a drawdown in inventories. That drop in inventories means higher demand. That and unrest in Egypt are the causes of this unexpected run-up, which could, again, add, as you say, 10 to 20 cents more. People have been tweeting me pictures of gas prices. Now, the Lundberg survey says the cheapest gas in the country is Charleston, South Carolina. And at Chris and NC saw $3.31 in that state in North Myrtle Beach. At J2 Loves Friday has it even higher in Columbus, Ohio. And my favorite, at Lance Rancid, tweeted a pic outside Chicago. $4.29, that's higher than here, but none of it's good when you drive for a living like Danny Akopian. How much gas do you buy weekly?
Weekly it's like $500-600.
Dollars,
of course. Sometimes even I don't want to drive because of the gas prices.
Well, you drive for a living.
Yes, I have no choice.
Well, Chicago and LA aside, GasBuddy.com says the highest prices are on Nantucket. There's probably a limerick in there. Mono, California, where only like 3 people live, and Haines, Alaska, all over $4.60 a gallon. But you guys, Mono really shouldn't be on that list. Listen to this. The gas tax in California has reached a staggering 72 cents a gallon. It's basically a 20% tax, and they just raised it this month because people are driving less or they're using more fuel-efficient cars, and the state is not getting enough money. So the result? Higher gas taxes. Back to you.
And Jane Wells, let me be the first one to propose a fundraiser for all those people on Nantucket that are struggling with those high gas prices. I know the Range Rovers must be lined up, Nantucket Reds the whole way.
There once was a gas on Nantucket.
Whose line was so long, the guy in line just said, forget it. Jane Wells, thank you very much.
Bucket.
You know, that limerick made it all the way to Australia.
It really did.
It really
Kangaroo
did.
was the gas station in South Carolina. Steve Leisman, tie this. Okay, here's our theory that we posited to you earlier, and you said, you're not usually, you're full of your dung that usually are, Sullivan, but maybe you're onto something. If 1.5 million people a quarter are buying a home, they're saving up. If 3.5 million people a quarter are buying a car, they are highly unlikely to purchase other stuff. No?
Probably in that quarter, but I think what we're talking about here, as you heard Courtney say, 70% of the economy is retail sales. So we're talking about, 300 million Americans, of which, say, 200 million or so are of age and able to buy and spend. The rest are spending for the people who can't. And you have a large number of people who could be buying houses or autos. What I did after you suggested this idea to me, Brian, was go back and look. And it turns out when people are buying cars, they're buying appliances. When they're buying appliances, they're buying home furnishings. When the consumer is doing well, the consumer is doing well. When they're doing badly. Quarter to quarter, you do have some trade-off.
So what happened?
Overall time, I think what's happening here is you have two things that are going on. Higher gas prices beginning to show up in the last retail sales report, and you have the sequester and the higher tax increase. What we look for here, Brian, I think the key to understanding the psyche of the consumer is what does the consumer see as a permanent increase and what do they see as temporary?